All right, what's up, everybody? Joshua Salvetti. Welcome to the High Performance Trader. And today, my main goal is to help everybody approach the market in a completely objective state of mind, right? So we talk a lot about getting in and out of the market in a consistently profitable way. And to do this, we must be able to access all the knowledge that we have worked tremendously hard to build, right? But until we can pull the emotion out of our trades, pull the fear out of our trades, pull all the incorrect analysis away from the equation, we're never going to be able to reach consistency. So my goal is to walk through the week, demonstrate how I was able to identify and adapt to market conditions based off critical levels, based off price patterns, based off chart patterns and volume, and to get in and out of the market consistently, objectively, profitably, right? So super pumped. Welcome, everybody. Super glad to have everybody here, and we're gonna have a really good week, right? So what's up, Darren?
Yeah, what's going on, Josh? Excited to get into these trades. Another great week.
Yes.
And let's get into it.
Absolutely. What's up, Todd? My boy Todd's here. Nice, good.
What's going on?
Not much, man. Ready to really break into it, right? So the reason I really wanted to dive deep in this webinar today of the whole anxiety, fear, panic, a lot of those self-limiting beliefs that cause us to make incorrect decisions on the market, right? So I believe every trader goes through this. It is not anything special. Anyone that's going through this, right, don't think you're, the only one. Our brains are wired in a flight or fight perspective, right, where we're constantly trying to address the surroundings around us. And to become consistent in the market, we have to learn to get rid of this, right? Because it's going to cause us to make just improper trades based on the wrong beliefs, right? So you guys know we dive very deep into beliefs and expectations and how that will limit you in the market, right? So it was a really good week. We were selling off. It was a great week to capitalize on bearish market conditions.
Make sure you're screencasting, Josh.
Okay, is it all right? Yep. Let me share my screen. There we go.
Not yet.
Okay. Thank you, bro. Perfect.
Here we go.
Okay. Okay, so yeah, look at this. So last week, we were continuously making lower lows and lower highs, right? Validating the bearish trend. Let me just throw pre-market data on, right? So sellers have definitely been in control.
Still connecting.
Is that
still hear him? I can't hear him.
You can't hear me?
Oh, it says you have an unstable internet connection. That's weird.
Okay. Hold on.
I can see the screen now.
Okay, you can see this. Can you hear me?
Yeah, I can see the screen. I can hear you.
Okay.
So
all right, perfect.
Good for now.
Okay, let me know if that gets funny. Okay.
Right.
Okay, all right.
Never seen it do that before, but yeah.
Yeah.
What it says.
Yeah,
I can see it, so we're all good for now.
Okay, all right, perfect. Okay, so basically the market has been doing a little retracement, right? And we're starting to reject this area up here. Well, actually, we did reject this 460 area very well. The S&P is starting to sell off completely fine, right? And I really want to stress how it really doesn't matter what's happening, right? All what matters is that you can identify what's happening in front of you, right? Like a lot of people think their analysis always has to be correct. They think their trade plan always has to work. And in reality, it doesn't matter what's going to happen. All what matters is what's happening right in front of us. And that's why I love our strategy, right? Because our strategy, with it being the break and retest off critical levels, right? The biggest thing about it is it really helps us understand who's in control of the market right now. And if you can understand who's in control of the market right now, you could then trade with that, right? We break it down all the time. We can't control the market. We can't even try to predict it. All we can do is take higher probable setups by understanding the market conditions. So we're going to break right into Monday. So to break into Monday, we must first look at Friday, right? So Friday, we had a very bullish day. and Friday being 814, 8 days ago, it was extremely bullish. Buyers defended this 44428. Buyers defended 44643, and we ended the day at the highest price, right? So this is very bullish indication. Whenever end of day and previous day high are the same, that's very bullish. What that is an engulfing bullish candle on the daily time frame, right? So let's just look at it. This was last Friday, super bullish candle. Yet in a bearish trend, right? So super bullish and ended completely green. Now
wasn't that Monday?
Yeah, wait. That was 8/14/2023. Super bullish. That was last Friday. So now
that's Monday.
Yeah, so now Monday
I messed up. Okay.
So Monday we sold off heavy pre-market, opening well below end of day, right? So once again, here's end of day at 44811, which was also previous day high, and now we're opening way below it. So this is very bearish. Now I got this 44643 level from the previous day, right? And if we could hold below this level, I was looking to play short. If we could hold above this level, I was looking to play long. Once again, see how I'm not trying to predict what's going to happen? I'm just giving myself an ultimatum like, hey, if we hold above this level, I'll go long. If we hold below it, I'm looking for some candlestick rejections to take the market short. So once again, it's really important to remember it doesn't matter what's happening. All what matters is that you can understand what's happening. So the way I did this is I whipped out the 2-minute, and this was a flawless trade. It was really good, and it was right in the morning. And basically the reason I was so confident with this is first we got this candle, right? Now, once again, super bearish candle. We got buyers trying to step up and then sellers overtaking them, right? So this is a buyer trying to buy 10 million shares, and the sellers are just soaking up the whole order. And then you get another candle, same wick, right? Super bearish, validating that sellers are trying to control this old demand zone, which is now supply, right? This is literally the epitome of our strategy when demand turns to supply, right? So this once was an area for buyers. Now those buyers are starting to stomp out of their trades because price is moving below their entry. So and then price rallies in, we get a massive rejection, and right here on this candle, right at 9:42 a.m., this is when I chose to take the market short, and I want to show you guys why. Let me delete that. So if you draw a price level right at the opening print of 44613, you get a perfect break below it and a retest. So this right here was my entry. And the rest was history. Now, this was a perfect play, perfect trade. And now, how can I take this trade with less fear, right? How could I take this trade with less anxiety, right? So once again, I'm going to pull my targets from the previous day, and this is where I want to take my profits. This is my target. So we all know and understand and can say confidently that the market imbalance is going to happen, right? There's like a 95% chance. I did the math before. I'll redo it just to get a more accurate number. But 9 times out of 10, you're going to capture a move from critical level to critical level. Now, this was, oh, actually, no, this, oh, I already got it marked. This red line is low, previous day low. So that is our target, and price literally rallies right into it. Now, one thing we're going to have to learn to do as traders is trust our analysis through pullbacks, right? Because every trader that trades options, even futures, doesn't matter. You're going to be presented a scenario when it looks like this, right? When price action looks like this, and you're now down, right here you're up 80%. Now you're up, let's just say 10%, right? This retracement is going to cost you money as long as you validate its presence. If you can get to the point where you go, hey, my strategy is still present, right? I don't care about this little retracement. It means nothing to me. I'm here to trade my process and my process only. Price then rips into 44581. You get massive rejection here, right? Candles closing below it. This is what Todd calls the GBI, right? This is a green bar being ignored completely, right? This is actually a perfect area to then add to your position, right? And what this is going to do is invalidate the belief in your brain of panic. If you're looking to add to positions instead of looking to get out of them, that is the difference between, I truly believe, $1 million trader and a failing trader. And then price literally sells off. Perfect break and retest. We get another break and retest at this level, and price sells off.
I think it's important to look at where we got those levels from, because you're just identifying them, but those break and retest levels were created on Monday.
Yeah.
So we had that 445.80 level was created on Monday.
Right. Let me see here. Let me just get back. Are you talking about these levels, Darren? These intradays?
Can you zoom in? I can't really.
Yeah. So this is Monday.
Yes. Talking about. No, that's Tuesday.
Is it really? Oh, my bad, guys.
You
I started
you got a little bit mixed up. It's all good. It's all good.
I was just so excited to talk about that trade. Friday, Thursday.
So we got an exciting one to talk about the day before.
All right. Yes.
I don't know why it. Yeah. So 8/14 is Monday.
Yes. Okay. All right. Okay. All right. So we'll just finish this one up. Yeah. So yeah, exactly. So we pulled these levels directly from the previous day. And now look, you go ahead, Darren.
Yeah, so there was one break and retest off of 445.80, and that was created on Monday.
Yes.
And then there was another break and retest created by Monday's lows.
Yes.
That one so first we broke and retested that 445.80 level.
Yeah.
And then we broke and retested the downside. So that was an opportunity to either add to your position or get into the market at that position.
Yep.
And then we broke and retested Monday's lows, and we kept on selling off. And my target was previous week's low. So I literally went to the last week. So this is Monday. I went, this trade we're talking about is actually Tuesday.
Yeah.
But I took the week's low, and that was 443.41. And that provided a perfect target for this trade. So I didn't just exit. And I also saw no valid reason to get out of this trade at Monday's lows.
Right.
Like, I'm looking on the 2-minute chart. There was we were knifing through that level. So we were selling off like super strong through that level. We came up, retested it on the bottom, and then we kept on selling off. So now my next target is my next critical level, which was, I believe it was Friday's lows, but which was pretty much last week's lows.
Right.
Do you have that?
Yes, hold on. Let's flip that up. Okay. Yes, right here.
Um,
443.50.
443.50.
Yeah, that was it. Look at Friday's lows right there. So that
was my target. That was my target for the trade.
And what you're doing here is identifying right there. Look, perfect. You're like, okay, I'm taking the trade short into yesterday's low. And then if it breaks yesterday's low, where's my next demand zone? Bam, Friday's lows. Perfect.
Exactly.
And then if
there was multiple opportunities to stay in this trade. There was absolutely no reason to get out when you first hit 445's 80.
Yes.
And then there was no reason to get out when you hit Monday's lows. And, I mean, it depends how many break and retests you want to hold on to. I had a trailing stop, and it kicked me out right after we rejected previous week's lows.
Yeah.
But I stayed in my trade. If I had put a trailing stop on these two pullbacks earlier, it would have knocked me out for sure.
Exactly.
But I only put a trailing stop after we broke and retested two levels. At that point, I was up over 100%, and I was willing to put my trailing stop in because previous week's lows is actually much more significant than previous day low. And that was my analysis for that trade. But it just goes to show that those were the two levels, the two critical levels that I was watching. And you can't just get out when the first one is hit.
Yeah.
You can't. And it's just you're gonna leave profits on the table.
Well, and it's so much more than that, right? Like I did that for a very long time. I would be up 30%, 40%, even 50%, and I would just get out just to take them. And yes, trading it's very important to secure profits, but at the same time, you need to be able to program your brain to not be afraid of these situations. And the only way to do that is by developing a process to staying in a trade. And that process in this scenario is the exact same reason for getting into a trade, right? So
exactly,
whether you're going short here, or even here, right? What criteria do you need to put on the trade? That same criteria needs to be invalidated for you to get out of the trade. It's a very simple way of doing it. And what it does is it gives you a tool or a weapon to fight the fear or the anxiety, right? Because trading is very anxious. It's very emotional, especially there's money on the line. And we tend to associate the reward with our skills and behaviors. And in reality, the only way to make money in this game consistently is to understand the only thing you can control is your behaviors. Your ability to stay in this trade is the difference between your consistency and you just putting on a lucky trade. Once I started really diving deep into the process of, hey, for me to get in a trade, I need to see a solid break and retest off a critical level. Next, for me to stay in the trade, I need to see this continue to happen because this is how price action moves. Large money, smart money, our banks are constantly getting in and out. And when they're getting out, they're being stopped out. And that's where we want to get into our trades. It's just a really great way of being able to identify who's in control of the market. I mean, once again, price comes all the way down to this level. I hit previous day low, and I literally used the 9-day EMA on the 5-minute, and it literally worked perfect. I got out on this candle because we closed above the previous day. We closed above. See how the candle's closing above this blue line? That was it for me. I mean, and it's very simple.
You got in earlier than I did, so yeah.
Yeah, I literally got in right here at 446.13, and I took her all the way down to 444, right? $2 move, slam dunk trade, and I love it though because it was strictly based on my process. We didn't take this trade because it looked like it was when the market looked like this, I was like, okay, there's a large gap. And another reason why I love getting rid of pre-market data is now we have all of this space here between my entry and my target. This is what you call super high reward, low risk. I'm looking to capture all of this move, potentially all the way down to here too, as long as buyers can't control this level. Now, if buyers controlled 446.43, we could have easily completely adjusted our way of thought to play this move to the upside. This point was critical. That's why we call it critical levels, critical point analysis. Whatever happens in this level is going to dictate a move all the way up to 448 or 443. That's why the battles happen here. because they're trying to take control of the market right here, and based on buying and selling beliefs. So yeah, this was a really.
And there's people that ask me on this day, how did I know to go short? And it's not like I approached the market on the morning of this day and said, I'm going to go short today.
Exactly.
That's never how I approach any day. What I did have is I had a critical level here, and I said, I am going to play with whoever controls this. If the buyers would have controlled it, I probably would have played long. 100%. I don't know the exact scenario,
100%.
But that's how I approach. I don't know if I'm going to go short this day, or I don't know if I'm going to go long. All I can do is react to what I see around this level.
Exactly.
And I saw that demand at 4450, 4460, 44650, and I saw selling around that area. And I said, I'm going to play with that selling until the next critical zone.
Yes.
So you don't know. It's all about, this is why we talk about reacting so much versus predicting. Because neither of us come into the day and say, we want to go long today or we want to go short. That comes from predicting, and you're going to set yourself up for a lot of pain if that's how you approach it.
Exactly. Because now you're basing your move off your ability to predict the market. And when you're wrong, you're going to beat yourself up. You're going to be like, oh, man, I was wrong. My analysis was wrong. In reality, you don't need to be correct. All what you need to be able to do is go, hey, whatever happens in this level, I'm going to trade with them. Said that perfectly, Darren. Perfect. And
if it suddenly reverses on you,
I'm
fine.
Out. I'm out.
That's okay. You don't, even if you put on a winning trade, you don't have some superpower that it's not like you had some skill that you were able to capitalize on that trade.
Right.
Like you just happened to pick the probabilities that were slightly in your favor,
yes.
And then the market actually went in your favor.
Exactly. Exactly. It was literally, hey, I'm going to risk 20 cents here for a $2 move. That's it. And, we've identified conditions through this level, through the rejections. I like what you said before, Todd, where you just when you get a large gap down, just picture it being a candle, right? So look at that. Look at that red candle here, breaking below a critical level. Demand is now supply. Take her down.
Break and retest.
Break and retest. That's it. That's literally it. I love it. It's changed the game for me. And I love it because I used to struggle with staying in trades so hard. And now I'm finally to the point where, like, I'm in a trade. I'm confident. Listen, I don't need to be right. I can't say it enough. All I need to know is what's happening in front of me. See, that's where trading gets so hard for people, is people can't accept the fact that they have no control over it. It's like, and you can be the smartest person in the world. You can know every strategy. You can know absolutely everything about every aspect of the market. But if you can't just understand the information it's giving you in the present, you're never going to be consistent.
Yeah.
So, that was really good right there. We'll break into Monday now.
Yeah, when you feel that candle in like that, it gives you a whole different perspective. Kind of when you feel like that, it's like, hell yeah, I'm going short.
Exactly.
I mean, I'm on this retest.
Exactly. Look at that.
Yeah.
Look at that.
Oh, I thought that was a candle there for a second.
No, yeah, I made that.
I was gonna say my chart didn't have that. Okay, now I see it.
Well, and think about it.
In essence, that's what it did.
Yeah.
I mean, on the futures market, that's really what happened.
Yeah.
Yeah, this is true.
Yeah. And that's why, I'll get rid of that pre-market data, and I'll go, okay, because all what a candle is a measurement over a time period of price. So literally, putting a candle there is the same exact thing, right? It's just a measurement of price over a specific time frame. Sellers were in control of previous or of pre-market or aftermarket. We're opening below, like, no one's ever gonna go long right here. For us to go long, they must own this level. That's why this trade was just so clear to me. I was like, dude, we're opening below this. Okay, go short. And once again, I benefited from this trade because of my ability to understand that sellers were in control. That's it. Not my analysis, not this, that, and the third. The only reason I made money on this was because I was able to understand sellers were in control of this level, and this was a higher probable scenario of it selling off. And then I just put on risk. So, yeah, that was a really good day there. That was a great Tuesday. Let's break into Monday, because Monday had some really good price action as well
for this trade on Monday.
Yeah, so we have end of day here. I think that's a pretty critical level to understand. Okay, so opening below end of day. I had demand over here at 443.38. I was kind of looking for price to come into this level for longs. Or, I'm sorry. I was looking to see who defended this level, right? We never came down to it. Instead, we ripped past end of day, right? Look at the volume here, right? Really starting to pick up. Previously, before the candle before it, let me whip out the 2 minute.
2 minutes says it all for me.
Yeah.
Especially in the first hour of the day.
Yeah. So
check out that break and retest at
right here
at 10 o'clock.
Yeah.
Actually on Fridays where is what I'm talking about.
Okay. Yes. You talking about end of day?
Well, you can go ahead and give your, because I found a zone at 444.50, but that came from a break and retest on Friday.
Oh, okay.
I don't know.
Yeah. All right. Yeah. Here, ready? I'll just let me go first, real quick. Okay. So, the way I traded this, is we opened below, end of day, right? So I was looking kind of for price action to fill this gap, but I did not like the move to the upside because it did not offer good enough risk reward for me to take the trade. If price maybe came down to 443.38, then, and something else happened, then yes, maybe I would have went for a gap fill, but it didn't. Once again, risk reward is absolutely and entirely everything. So I don't like this setup. I'm just letting the market play out. And then we rip into end of day, right? And the volume really starts to pick up. I'm still not in this trade because I just, I'm just want the market to literally just, I don't know, do its thing. Because we had this previous day high right here. Or was that previous day high? Let me see. It was an intraday level from Friday, way above. So I ended up taking the market long once we consolidated right above this level. Right? So I took the market long right here. Price rips up, rejects. Dude, completely fine. My stop loss is end of day, right? Once again, the market's not going to do perfect. It's not going to abide perfectly to your trade plan, but you must go, hey, I'm looking to capture a move all the way up to here. What do I need to see to make this move, right? That's what goes through my brain. That was good enough for me. I was like, okay, I'm literally risking 30 cents from here to end of day to make a potential $2 move. Price rejects on me, but holds, right? And this is another reason why we must be mentally bulletproof, because, right here, you're up like maybe 30, 40%, and then price rejects on you, takes it all back. And if you don't have that mental stability and trust within yourself, you're going to stop out here due to fear. And in reality, that was just a minor pullback and price rallies right into your target. So that was my Monday trade. Darren, what do you got?
So back on Friday, if you kind of look on the 2 minute, you see that break and retest that happened around 10, 10, 14, 10, 15.
10. Yes, this one right here. Wait. Oh,
bam, right there.
Yeah.
So if you can draw a zone around there.
Yeah. Ready?
So right there, and okay, so you see that zone, and now look at exactly 10 o'clock when we broke through that level, and then for the next 15 minutes we saw super high volume.
Yeah.
So we never really saw volume in the first half hour of the day. It's weird. It's super low volume, and we only see volume pick up like crazy once we break that level. So right from 10 o'clock to about 10:20, we see pretty high volume. Yep, right there. You highlighted it. So I'm assuming that there's some sort of buying going on at that level, and buyers want to defend that level. And that's what happened for the rest of the day. Price could not get below that. Every time we came into it, we saw super high vol, and buyers were stepping in. And then what happened is we closed the day above that level, right? Yeah. We never broke that level all day. And then what happened is Monday, that's when I took the market long, because buyers literally showed up right in that level, like clockwork. And basically I targeted Friday's highs, basically.
So I remember too, on our last week's webinar, we were talking about this 44450 level because it was significant throughout the whole day on Friday. We cannot get below it. It was tested once, twice, over 40 times probably. We tested this level, couldn't get below it.
And that volume,
yeah,
it was just I saw that volume. I saw low volume at the beginning of the day, and then I saw super high vol once we broke that level. And that it just caused me to draw my attention to it. And then when we saw buying here on Monday, that was my edge, and I saw it and I took it.
The volume's validating that the large money is getting into the equation.
Yep. Break and retest with volume and price action all telling me the same thing was super valuable.
Yep. Absolutely. And
it happened a couple other times this week where volume towards the end of the day acted as a critical level where you either take the market long or take the market short, but we'll get into it as we hit these other days.
Absolutely. Now that
I took it on the y'all's time, the 1002 candle. That's where I took it long.
Oh, when it was beaten end of day. I like that.
Is it?
It's a little before that.
Oh, my bad.
Yeah, before that. Yeah, you see.
But it closed the gap with strength. Kind of. Okay, go ahead.
I took the RBI with that big bottom wick. That when it took the high out of that, that's where I entered.
Okay,
nice entry. It's a little bull flag going on there.
Yeah, I like those RBIs because it's such a tight risk reward.
Right. So you're talking about this candle right here, Todd, at 10 o'clock. That's your RBI, your red bar being ignored.
Yeah, you see it's got that long wick on it?
Yes. Okay.
And it's we kind of made a higher low.
Yep.
And then it came back up, and then
right here.
Once I seen the higher low form, I'm taking the RBI, especially if it looks like that with that wick.
You know, I really like that analysis because I've been using lower highs and higher lows a lot more than I ever had, and they're super valuable, right? Because right here on Friday, we get a perfect lower high, right? That's the definition of market conditions changing, right? Because I remember we were previous day low, we rip into it, and then price starts to sell off, but we get that lower high, causing the price to rally. So yeah, those lower highs and higher lows are just they're really helpful.
Yeah, that's why to me, when you talk, everybody talks about the head and shoulders pattern.
Yes,
that's a higher low and a lower high. That's all that is. That's the start of that's transitioning from one trend to another.
Exactly.
You know.
Exactly. Like this has been my go-to right here up top, just for a quick example, right? So price rallies, we'll call this into supply. And then this guy right here, when he matches up to a break and retest, this is my entry always, right? And
Definitely.
And literally all that is a break and retest off a support level. It's a right shoulder of a head and shoulder with a deeper neckline.
Right.
This right here is my go-to lately. And
lower high.
Lower high, out of supply. Watch her fly.
That's it.
Yeah, and I loved it though, because now let's talk about this, right? So Monday ripped. And then this is exactly where I got this level of 44650, because once we formed this demand that sellers cannot get past, sellers cannot get priced below 44643. Now Tuesday comes and we open below it. I was like, oh man, this is over. So this, once again, I'm using this critical level as a canvas. Market's painting her picture right here going, hey, that super tough level sellers couldn't get past on Friday, it just got shattered. So now I'm going, okay, conditions are different. Now we are bearish. Now I'm 70% bearish, 30% bullish. What do I need to see to put on a higher probable trade to the downside? Candlestick rejecting it and a break and retest. It's literally what we got. And then we just kept shattering previous levels. Boom.
And that demand on Monday came from Friday's highs.
Exactly.
Like that is
our lows. Yeah.
Like the market, for the first time in the last 5 weeks, we made it above Friday's highs on a Monday, and basically buyers defended that level, which that's where it came from, and that's why we went short on Tuesday, because we broke down below that. Now sellers defended it.
Yes.
Entry. Bam.
Yes, exactly. So now notice how we're using price action to tell us the conditions of the market throughout the week. So that right there, perfect. Okay, next. So what's really
That's
cool.
Monday and Tuesday.
Right. So there's Monday. Here's Tuesday. Now you can see here we finally break this level, and it's, you have to point out here, we have this critical level we cannot get past over here at 44534. Now, once again, real quick before we go any further, buyers showed up here. I don't want to go long, though, until we invalidate a break and retest. We couldn't invalidate the break and retest from 44522. If buyers defended this level, now I'm looking for longs targeting 448. But they didn't. Sellers defended it.
But they didn't.
So here we go again with my analysis does not need to be correct. I just need to understand what's happening, right? If you're ever about to put on a trade and you have any confusion, ask yourself, do you understand who's in control of the market right now? And if you could go, yes, well, sellers are, as long as we hold this level. Okay, trade with sellers. That's literally all I try to do. We break this level at the right at the end of the day, and now this level is now means pretty much nothing until further notice. So now the next day, Tuesday, we got previous day low over here at 44228. We have the open, which played a very important role this day. The opening print was right next to previous day low at 44246. Now you guys know I'm always talking about my four levels. The high, previous day high, previous day low, previous day close, and previous day open. So previous day high is all the way up here at 44643. Opening well below it. End of day, we rallied right past, right? But what's important to point out here is we cannot get past this level that we were using to validate bearish market conditions previously. So I'm really not bullish in this scenario until we can hold. I don't want to go long here because my risk reward is not good. My first my first target in this scenario would be 444.50. I don't want a long end of day. I just didn't like it. I didn't like trading against the conditions, especially after invalidating that Friday's low level. Right? So the one level we were just talking about. So I just waited. Right? I waited. Was pretty patient.
Check out that volume. Check out that volume right there.
Right here?
No. At the close. So.
Oh wow! Yeah.
Tuesday's close.
Yeah.
Tuesday's close and low of day and Monday's open were all at the same level.
Yeah.
And with high volume. I mean, the volume started at like 4:30. And it went until 9:30 the next day. So we had super high volume
in this area.
Right there. Yep. Yeah. And so that's where I drew a zone there. But we can whatever. See how it goes.
So volume's picking up, and then price kind of does its thing. And this is a perfect example here of how being patient and just letting your day play out really will help you. So you have previous day low, right, over here at 442.28. Price is doing its thing, can't make really any moves. Comes down, sellers take control. You get a let me get on the 2 minute. It just really shows the strategy very well. This open print played a very important role here, but so did previous day low. Let me get rid of that. So we come right into previous day low and get met with buying. Now, once again, I don't want to go long until we can hold a previous resistance. So price comes into previous day low. Right here, I'm actually pretty bullish. If we can hold 442.96. If we could hold this level, I'll look for moves targeting high of day. But we couldn't. Instead, price reversed, broke below previous day low, came up. I took the market short on this candle, right? And literally stop loss at 442.28. Oh no. I'm sorry, guys. This is where I took the market short. Right on the retest of the open. Right? So once again, you have a critical level, previous day low, an opening print, price breaks below it, comes up, tags it, right? And then price sells off. Now, even if you did take the market short right here, you would have still been completely fine, right? Because in this scenario, you really can't afford to stop out of the trade until you hold above the open. So, yo, Debo, do you know how to mute? Hey, Gigi, can you mute? Can you mute? Perfect. Okay. Okay, so price literally breaks below the open, comes up for the retest, right? This right here would have been a perfect entry. Even if you got in right here, you're completely fine because you're letting the market do its thing. This does happen often, so it's worth talking about. On the 2 minute, sometimes you're going to enter right here, and price is going to do its thing and come up, and you need to be able to go, hey, I can't get out of this trade until we hold above the open, right? So that's what was going through my mind because initially I'm looking to play off previous day low, but if we're holding below the open as well, you gotta, you know what I mean? You have to factor that into your risk reward.
And then I really love that zone right there because of that volume. Yeah. Also, that it was coupled with low of day, and it was coupled with an open. It was like so many critical levels, all at the same place, and volume at the same time. It was a banger setup. Yeah. This is literally the setups I live for right here. This right here is like break and retest to the max.
Yeah. And you know, I'll do that a lot, right? So say you do enter on this candle, right? Because this is definitely a scenario that happens a lot. You break below, you enter below. Use your 5 minute. You know what I mean? Use your 5 minute and go, hey, what do I need to see to really get out of this trade? I need to see price get above this 4426. If we could get back above the open, then okay. You know, I'm looking to get out of this trade. This is what we call trade management to the max, right? Because not every setup's going to be picture perfect. You're going to enter maybe early. That's completely fine. Understand and trust your strategy, right? And look, if you did, you would have literally caught a beautiful move downside. And these moves, another reason I love these moves is they happen later in the day and you make so much more money. I mean, these contracts, I literally think I bought these contracts for like $63 in the money and sold them for almost 200. So like they just swing so large, the premiums at this time of the day. I think it's got something to do with volume.
And also we were approaching FOMC minutes, and basically the volatility was going up, and so the premiums were increasing because we were approaching minutes, and we were moving towards the end of the day. So there was like an extra thing adding to the premiums were increasing.
Now, thank you for saying that, Darren, because the reason why this gives it so much value now, right? So that was the first trade. The next trade was off end of day, which was super strong support in the beginning of the day, right? So this line right here, blue, end of day, which is 44295. Support, breaks, does its thing, sells off, right? We captured this move right here, no doubt. In this, you know, whatever. Now, price does its thing, FOMC minutes happen, rip right into end of day, rejects, take her short, bam, she sells off right through it, ends the day off low. Super good trade, super simple. I love seeing it because this right here just validates our strategy so much. So even with all that volume that came in off FOMC minutes and so on and so forth, right, end of day was still defended to the max. You know what I mean? It's just really cool to see. It just shows that there's a massive seller here absorbing all those orders, right? Because you get all this volume, you get all the buyers showing up, trying to defend it, rips right into end of day, sellers take control of the market, boom. Validating bearish market conditions, right? Like that's literally what, you know, so after seeing that, once again, we're making lower lows, we're making higher lows. Love it. Oh man.
Yeah, that was a great break and retest. Retest. And the thing was that zone was pretty big. Like we had a green, at least I drew a green zone all the way from end of day down to previous day low.
Yeah.
So it was like a
high risk reward.
It was like a fifth. It's a pretty big zone. I don't normally draw zones that big, right. But there was like a whole area where I was expecting buyers to. Or sellers to step in, and they stepped in, and they got tested, and then eventually, once we tested end of day, we came down.
Yeah, no, it was lovely.
You don't do zones anymore?
I do, but it's weird. Like, see, I'll have zones here, and I think maybe one of the reasons why, because it is crazy. My chart's filled with lines. One of the biggest, I'm just really looking to see that critical point analysis we always talk about, right? And you can see it in a zone as well. The only reason I don't like zones is because they're color. I may start doing zone. I mean, I could probably do zones if I make them gray. I just completely like. Yep. I like to be entirely non-biased. Like, and when I used to struggle as a trader with supply and demand, it's because I would be biased for buyers in demand, and I would be biased for sellers in supply. So, right. You know, this is just me adapting to my new way of thought, being like, hey, it doesn't matter what zone I'm in. If it's demand or supply, I don't care. All what I want to see is what is happening in the zone. So
yeah,
that's what's kind of.
I mean, it's if you're below it. So if you have a critical level and you're below it, technically it's red. You know,
exactly.
Like it's red until you break above it, and then as soon as you break above it, it's green. Yeah. So the color is only dictated by where price is currently. Exactly. It's not dictated by what color you make it.
Yeah.
And so it's just the same with a level. Like you could draw a level in your mind. If price is below it, that's a red zone. If price is above it, that's a green zone.
Yeah, but just my mind, what works best for me is just using the lines. And that's the thing, and that's what's most important is understanding what works for you and doing it. Right? Like that's what trading's all about. You know what I mean? Like there's no right way. At the end of the day, it's hey, I don't want to make biased decisions in any way. And how could I make sure I don't, right? So yeah, so now the next day was really this day was phenomenal. It's probably the best day I've had on the market all year. What was really cool though was this trade in the beginning. So we were opening up above end of day, right? Super critical. I'm once again, what do I need to see to be bullish, and what do I need to see to be bearish, right? For me to be bullish, I have to hold this level, which played a pretty important role previously, right? And I noticed that it was weak. We weren't holding this with strength. Buyers weren't defending this previous support with strength, right? So we get this seller and we literally come below this level. I enter short right here at 441. My stop is above this wick. Because if we can get above 441.44, then I'm bullish. And I think price can rise to 443, right? But if not, I have to remain bearish and target this gap fill. So it was funny because I entered this trade short right here. And then price started to rally up. But I had my stop in. That's it. I don't care. You know what I mean? I can't control everything. It's not going to be a picture perfect trade. It never is. I don't want it to be. Because if I get a picture perfect trade, I may start to think picture perfect trades actually happen. And in reality, they never happen. So literally, enter the trade short here, targeting the gap fill, right? Looks good. Break and retest off opening print. I'll take it. Price rips up. My stop's up here. Once we rejected this so strong, I was super confident with this trade. I was like, oh man, this is perfect. We literally, buyers tried, sellers defended. This is why I love candlestick analysis and being able to understand what they're telling me, right? This is everything right here. This is buyers trying to show up and sellers just soaking all those orders up. And then bam, price starts to sell off. Literally rifled down all the way. Hold on. And what's really cool to point out, once again, we're breaking a critical level, retesting it. Doesn't hit the target, right? I literally write in the Discord, I'm like, I'm not afraid of a green bar. I don't care. It's completely fine. This is my pullback, right? And look at how that level held. Bam! Isn't that crazy? Literally like a wall. Like a wall. Boom, boom, boom. So once again, like this is how well, and I'm not going to say our strategy, but our philosophy, our way of thought, our ability to identify and adapt to market conditions with critical levels is going to help you trade with the people that move the market, right? Literally, you got all these buyers trying so hard. We can never get above this level. And then once they finally give up, look at how it just sold right off, right into that level. Perfect. Boom. right below end of day, right below low of day. And remember, we were talking about this earlier in the webinar. If buyers can't defend this, this thing's going to sink. But they did. But I'm still not bullish.
That's a great target right there.
Yeah, you know what I mean? And we've been seeing a lot of this. We've been seeing a lot of end of day and low of day being extremely close. And you guys have to pay attention to this because this is going to tell you a lot. And it does later in the day. But, you have buyers trying to defend this. Look at the volume. Volume's picking right up. Perfect target. Slam dunk. I still can't be bullish, right? Because some people, so I can't be bullish until this seller is gone. When this seller is gone and all his orders have been soaked up, then maybe I could start to target an upside move, right? But instead, we could not get above that, right? Look, even later in the day, can't get above it. So yes, you could have captured a move out of here, but I didn't want to because we're holding below previous day low. I actually took this trade short, right? Because we're holding below previous day low. This looked very weak to me. That was very weak. I entered the market short, got stomped out of my trade. Once again, completely fine, dude. That means nothing to me. I identified sellers were in control, and I took my trade. This is a high probable setup that makes me money. And actually, I made tons of money on this setup just an hour later. So, once again, don't let a losing trade define you. You're supposed to lose. Your ability to lose dictates your ability to become wealthy in this game. I truly believe that. Your ability to take an L and just keep it moving is the difference between $1 million trader and an unsuccessful trader.
100%, man.
You know what I mean?
More.
Yeah, it's literally because say when I took this trade short, and this is how I used to trade. I would take this short, and let's just say right here I'm up 50%. Let's just say I'm up $500 on this trade. And then, bam, I stop out and I lose 100. If I let that dictate my mentality, I may have walked away from the computer all upset. I may have been like, oh, my analysis was wrong. Buyers must be here. Because if I was wrong, if I gave my own analysis that much weight and I lost on this trade, I would then go, hey, I was wrong, so buyers must be here. And they were never here. Yeah, they showed up a little bit, but the true move was this guy. So, again, you can't let your analysis hold that much weight, dude. You need to be completely formless in this game to be able to be like, okay, I'm expecting sellers to show up here, but if they don't, so be it. You know what I mean? How could I then make, on to the next? So price literally comes back down into this demand zone. And let's just walk through the psychological aspect real quick because I love it. So buyers show up here and they're making all this money, right? These buyers are up, let's just say, $1 million on this trade, right? So they take their profits and now price comes back into this level and they go, oh, dude, I want to make another $1 million. So they literally enter this trade long. Oof. Dude, they're just like, oh my Lord, I'm down tons. I'm down $1 million now. How do I get out of my trade? Price comes up. They stop out of their trade, right, for way less than they bought, right? And literally them stopping out is adding tons of selling pressure to this move. Let's run through where we got these targets from because they were way back. But actually, I think this was one of the trades. I'll tell you right now. Hold on. Oh, the reason I was super proud of this trade is we shattered through this, and if you chose to wait for the retest, you killed it. You know what I mean? Because, once again, all this selling pressure is just a breakout. This means nothing to me. This right here is not our strategy. We do not go long. We do not go long. We do not go short here. This right here will not work for you. It may work for you sometimes, but over the long run, this will not work for you. This is what will work for you. Waiting for that retest, validating the whole psychological aspect of it.
One is acting out of emotion,
yes,
and feeling like you missed the move.
Yes,
and the other is acting based off a probability-tested edge and based on psychology, which we can guarantee.
Yeah, well,
so there's a huge difference there.
Yeah,
like yes, you can make money there. Sure, you can make money, but is it going to be repeatable, and is it going to program that psychology into your mind? That's the question.
Exactly. And now I used to take these short. I used to hop in these immediately, right? Because, you don't want to miss the move. And literally, you'll pay so much for your premiums and your contracts here because look at the volume. When volume is high, the price of the option increases, right? So literally, you're paying, let's just say you're paying $100 for your entry here. Price is going to come up to this retest, and that contract's going to be worth about 70, right? This right here is like a 30% move. It's literally almost 60 cents. This is a 30% retracement on your entry. So now you are down $300 on 10 contracts instead of being up $300 on these contracts. Now that $300 might be the reason why you're inconsistent. You know what I mean? That's literally, you're giving away $300 because you can't control your emotion.
That's if you actually stop out there.
Exactly. And you're not going to stop out there. You're going to probably stop out at $4. Yeah. So, you're risking now $500 instead of being patient. Do we miss?
Well, the problem with that too is, let's say you do hold on to that trade. That 30 cents that late in the day, I mean, you're down 40%.
Exactly.
Right? So now, if you hold on to that trade and it eventually pays you, you're programming yourself to say it's totally fine to hold on to trades that go against me 40%. And that is what is going to cause you to keep zeroing your account, because 40% losses over and over again are eventually just going to kill your account.
Yes.
So if you did hold on to that trade, if you entered based on emotions and you held on to that losing trade, yes, you may have made money, but now what you're doing is you're subconsciously telling your mind it's okay to hold on to trades that move against me 40%.
Exactly.
And that is what's super dangerous.
Exactly. I couldn't have said that better. That is exactly why you don't do that. Because if and when you get lucky,
you have to wait for the retest.
If and when you get lucky on this trade, and you'll get lucky. It's just how it works.
Mm-hmm.
Now you truly believe you did something correct. And yes, it's hard. It's hard, but it's not supposed to be easy. Remember that. This is trading. We're trying to become millionaires from the market. It's not supposed to be easy. It's supposed to be hard. And your ability to control yourself and make sure you're actually becoming consistent through the correct behaviors is going to be the hardest thing you ever do. But once you start to do it and reprogram your brain to wait, it's just gonna add so much conviction and confidence and control in yourself, in your ability to identify these. And now you're rewarding yourself on correct behavior, which is going to make you a monster down the road. Yeah, it's so important, Darren, that you said that. And now what's crazy about this trade is there was really no reason to get out of it. So let's just break it down. So I almost made 500% on this trade. I also traded QQQ, but we're just going to stick to SPY here. But price comes here, starts to sell off, right? My target was 43697. I'll show you guys where I got that. 43697. This critical area where if we could break this, look at all this move to the downside here, right? If we could hold below this level, this 43697, we're going to get a lot more selling. And we did, right? Pre-market next day. But just super but that's where I got that level from, right? This little demand zone from this candle, right? This candle, buyers showed up. There was strength here, so I want to see this get broke. And that's literally the one we broke. Or that was my target. We sold off right into it and then below it. And it was literally I got out of this trade on this candle. And the reason I got out of this trade is because it was 45 minutes before the bell ended. And when you're up 500%, these swings are going to cost you 200%. Because you're you're in the last hour of the day. Literally, I don't like trading past 3 o'clock because of this. So literally sold off, and literally volumes creeping up.
Holding through a pullback in the first hour, 2 hours of the day is completely acceptable. But holding through a pullback that late in the day is just insanity.
That's going to cost you 200%. So
you could be up, $500, and it could go down to 100, 200 in a matter of like 2 candles.
Yeah. So super good trade though. I mean, there were people on the Discord that got in this trade and then took profits and re-entered, and I loved it. Because that right there is the goal. The goal here is to get, understand, hey, you make 100%, no doubt. And they're still realizing, hey, there's more, right? Like we tend to think we're so important where if I'm up 100%, the market must know this and it must reverse soon. That's bullshit. You know what I'm saying? Like the market doesn't know how much you're up or down. It's going to move its own way based on its own conditions. Todd, I seen you hit this trade as well. Yeah,
I had to go build a kitchen, so I entered in pre-market and I set my targets, way down.
Really?
And I think I was looking at it on my phone, but I was just looking at the chart. And I was like, man, I wonder if I took profit.
You caught the whole move.
I caught the whole move. Now I came back, I cut my computer on, and my jaw hit the floor.
Well, bro, this is the thing.
The best feeling.
I love everything you said, bro. You had your stop loss in. You had your target. That's it. I heard this one professional trader said this, and I loved it. He said, "You're never gonna make better decisions after you have entered the trade." And basically what that means is, Todd set his stop loss. We'll just say at 441. He set his target deep because he understands the market auction. He understands the critical levels. He understands that the imbalance is going to happen, and if it does, and this dude literally it worked all day, put a kitchen in, and captured it was like a $13,000 move. It was massive. Just sticking to his script, dude, his process. Sometimes we enter trades and we let all this outside information dictate our moves. And once again, I was in this trade. I was telling people, do not look at your P&L. Do not look at your P&L. Yeah, it's hard. I looked at my P&L after being, after the third move, or the third dollar. It's gonna happen, but I was proud of myself for understanding, hey, these conditions are bearish all the way till 43697. What do I need to see to stay in this trade? The 9-day EMA, once again, working very well on all these red candles. So, because these were once green. These were green on these wicks, but then the last 2 minutes, sellers defended. So, yeah, really, really good stuff. So we'll go on next to Friday. Okay, so we had a very large sell-off pre-market into a 443 level that really was nothing that significant to me, but it did come from really nowhere. So once again, the market does what it does. It's not always going to work perfect. I was expecting, well, here, let's just run through it. So we opened well below end of day and previous day low. Technically, I should have been looking for a gap fill this day. It did make sense, especially the fact that buyers showed up here. And then right here, Todd, that lower high, that right there should have been a clear indicator of buyers showing up.
Yeah.
And this is a perfect example here of that everyone is susceptible to making mistakes. So I was biased this day for a short move. And what I mean by that is all what I was looking for was short plays. I wasn't looking for long plays. I was only looking for short analysis where I should have been like, hey, if buyers defend the open, this isn't bearish. How can I make a bullish trade? You know what I mean? So I did not capture this move to the upside. I did enter short here off previous day low. I love this setup. This is one of my all-time favorite setups. The reason where I entered short was this candle right here. This lower high happened. And then the green bar was completely ignored, just like Todd always says. Entered this trade short. My target, looking back, was a little too far. But actually, my first target was 43450. And then price literally sold off very well. We got a really nice break and retest right here. And then buyers just showed right up. Just completely showed up. And I should have just got out of this trade when this buyers defended this. But this is what I really want to talk about here, because this right here is the meat and potatoes, right? So I'm in a winning trade. I was up 78% on this trade. 10 contracts, that's like little under $700. I'm super pumped. And then bam, buyers show up. This candle alone ate probably almost 450 of my profits. I did not want to accept that. I thought I was right here, right? Here I am going, hey, I made the correct move. Now I'm being rewarded. And once again, the market does not care. It reverses. Boom. Takes about half my profits away. And my stop loss is right where my entry is. And then the market rallies right into it. And I stop out and I lose $30 on this trade. Boom. Is what it is. Completely fine. I identified my entry. I identified my target. And I stuck to it. Should I have gotten out right here? Absolutely. Did I? No. That's completely fine. This is going to happen. Your ability to let this roll off you is going to make you a consistent trader. You need to remember that you are getting paid to identify higher probable setups and to act on them properly, right? So could I have traded this better? Absolutely. Did I log that in my journal? Absolutely. It is what it is. It's completely fine, and so on and so forth. I ended up making another trade, which was off end of day here. We got this nice double top. I guess you can call it a lower high as well, because price did not retest the high. Price rips into it, rejects. I go short on this candle, the retest of end of day, droops down, comes up, rips right into that same level where buyers defended, which I guarantee you Monday, doesn't this look like last Friday? This looks identical to last Friday. Anyways, yeah, so buyers rip right into this.
I see it. Yeah, I see it. Yep.
Doesn't it, Darren? It literally, this is identical to last Friday, where we're now getting a super strong area. Yeah. I'm curious.
Interesting.
Now, if we open below this level, Monday, I'm playing shorts. You know what I mean?
Yeah.
And I
mean,
guess
there's not as much volume. The reason I went with it last month or last week is because there was super high volume.
Yeah.
And yeah, there was volume. Not quite as much as last time, but it'd be interesting to see if it does.
Well, exactly. And this is the important here. Just identifying a critical level and using it to make moves, right? What's going to happen?
That is a break and retest right there. That's our strategy.
Whatever happens in this level, we'll play off of. But yeah, so that was my target. I was able to take profits right as we bounced into it, and gracefully I did because buyers defended it. So I'm
drawing that level right now.
Yeah, that's definitely important. And volume was picking up here. So yeah. And that was it, man. That was it for the week. It was a very good week. Once again, just trading off of just critical levels, and just controlling you and your ability to get in and out of the market. I can't stress it enough. You are only going to be as good as you believe that you can be, right? Like if you don't believe in your ability to stick to your process, it's probably because you haven't done it enough. So I just highly advise everybody just to really stick to the game, stick to the strategy, trust yourself. Message us anytime, any questions. But I mean,
the more trades that you take that aren't based on this strategy, and then you win those trades,
the worse.
You're basically telling yourself that you don't need to follow your strategy.
Yeah.
Just because you can make money, just because the market is moving, does not mean you should trade it.
Exactly.
Because if you just take random trades and they win, you're just watering down your conviction. You're not going to have conviction towards one specific setup.
Exactly.
You're just telling your mind, oh, that's perfectly okay. You can just take the market long after you see 2 green candles. But what you want to do is only take setups which fit your specific criteria.
Yeah.
And the more strict you are about that, the more conviction you're going to have in it. That's where conviction comes from.
Yeah.
It means sticking to the same thing and doing it over and over again to the point where you can trust it that it works 70% of the time, 80% of the time.
Yeah.
Hell, it can even work 30% of the time as long as you got your risk to reward figured out.
Yeah.
You can still be profitable.
Exactly. 100%. You touched on something very important there, Darren. That conviction, right, where you see traders holding through pullbacks and then coming out on top, that is earned. That is built. That takes time, right? Like a lot. People are like, dude, how do you trust your move, right? Like, it's literally comes from understanding price action and just through time of doing it. And I truly believe the better you get at it, the more conviction you have, the better trader you're going to become, the more money you're going to make. And it's just going to get you that much closer to achieving your goals and your dreams. And then once you conquer something like trading, can you imagine what you're going to be able to conquer in life once you've learned to control your emotions completely and stoically? Like if you could show up to the market and not even care about how much money you make, but only trade your process, you're going to be a beast in everything that you do in your life. I promise you. And if you're not there yet, that's fine. It's a lifelong journey. Like it's nothing. It's going to take your whole life to figure out and do, but I wouldn't necessarily say take your whole life to figure out, but it's going to be a lifelong journey that you're consistently getting better at. So just keep up. It's really, it's amazing. I love what trading's done to me as a person. It's helped me grow so much, and literally, it's all about those 3 C's: the confidence, control, conviction. You have those 3 things, you're gonna be a beast. You're gonna kill it. So, just keep it up. Any questions? Message me, message Darren, Todd. Doesn't matter. Yeah, that's pretty much it. Does anyone want to talk about any trades they took during the week or anything like that before we wrap up here?
I do want to kind of add to what you said, and Josh, you helped me with this more than anything. It opened my eyes. Is each individual, you have to journal your trades because that's what gives you the conviction in the 3 C's. You have to journal your own stuff and go through it.
Yeah.
Before I joined this channel, I didn't do that. I started doing that, and I see the setups are so clear. When I see them, I'm in.
Yeah.
Because I've journaled it so much, and I'm looking at it and burning it in my brain, and it takes work, but you got to do it.
Yeah, it's a game changer. I'll never forget. I used to show up to the market. I think I traded around 2.5 years before I started journaling, and I would just lose every trade. And when I say journaling, I'm not talking about writing down if you won or lost. I'm talking about copy paste your trade into Microsoft OneNote, print it out on a piece of paper, TradeZilla. I don't care what you do or use. If you are having an issue doing it, message me. I will show you how I do it. Literally anything where you can take a picture of your chart, put where you got in, why you got in, and then write down the emotions you were having, how much money you made, your percent, your return. And you have to be honest with yourself here. No one's going to look at your journal. This is only for you. But what your journal is going to do is highlight your strengths and your weaknesses. And based on the information you get off your journal, you're then going to be able to tweak your behaviors to start seeing more results. Like this whole strategy came from me and just journaling, losing trades. I would take reversals every single day and I would lose. And then 1 week or 1 month, I'm like, dude, I lost a lot of money this month. Why? And I realized every trade was a reversal. And through the members of this team, we then, because I log every trade and trading metrics as well as my journal, win rates and their success, I realized the break and retest had a tremendous success rate. The win ratio was extremely high. And then I realized, why am I trading against trend? And then we just kept going. And the team, me, Darren, Todd, all of us, showing up every single week talking about it for a year straight. And now we're here. You know what I mean? Like it's so important it's so crazy how we've come so far, but how much work we all put in to get here. You know what I mean? Like it started at the reversals, it started at this, it started at that, and then the losing, and then the winning, and then if we never took the time to dive super extensively into our journals, none of this would be here today. And I truly believe this is just the beginning. We're finally, our consistency is through the roof. We're just becoming better traders every single day. We're just identifying more better setups. And the journaling's everything. It's everything.
Yeah. You got to ask yourself so when you make a mistake, you have to ask yourself, what did the market do that caused me to make this mistake?
Exactly.
It's really not enough just to say, I fucked this day up. I'd have made a mistake. I'm not going to do that in the future.
Yeah.
Because you made a mistake. That's great. You identified that.
Why?
But you have to say, what did the market do that caused me to break my rules?
And behave
and that way, you'll be able to identify the specific thing that caused you to do that.
Yes.
And you slowly work back and back and back, and you figure out what are those things that – and it's going to be emotions. At the end of the day, it's going to be emotions. You're going to figure out what are the emotions that you're having the most trouble with, and that is eventually – finding the root cause of your mistakes.
Yeah.
Yes, we all make mistakes. You have to figure out why you made these mistakes.
Exactly.
And that is the difficult work. And, it's funny that the difficult work is the work that actually makes the most difference in your trading.
Exactly.
You think it's going to be the comfortable things
that
allow you to get to that next level? No.
It's going
to be the difficult things that 99% of people refuse to do.
Yeah.
And I was one of those people for the longest time. And ask anybody who didn't journal their trades, like Todd just said. Like, it moves the needle the most, but it's the difficult work that will allow you to reach that next level.
Yep. And think about it. If 90% of people are failing, but 90% of people aren't doing the difficult work, what's the common denominator? You know what I mean?
Ding, 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 ding,
ding,
ding, ding.
It's not the strategy. Anyone can learn a strategy. It's becoming consistent. That's why I always say it's a state of mind. It's not the strategy. Yes, the strategy does help tremendously. But you need to be able to believe in the strategy. If you don't believe in the strategy, it's never going to work for you. right? Like I could sit here till I'm blue in the face and show somebody why it works, how it works, but until they get it to work, they're not going to believe in it. And if they're not going to believe in it, like, you know, the way they need to, they're not going to see consistency. And just like you said, Darren, that's the hard work. That's why we find a lot of traders that you know, they still trade against trend, they still trade this, they still use this, they still use indicator, and in reality, they're going through their own journey, and they're not yet willing to let go of their belief system, and that's why they, you know, they fail. And I'm not saying there's only one way to trade. All what I'm saying is you must believe in your strategy and your ability to adhere to it, right, to become consistent. And the way to do that is through journaling, and obviously a team that also does it. So yeah, if anyone needs any help like doing that, or they want to see the way I do it, I have a video on it. It's called Trading Metrics. It's in Trader Bootcamp. It's super valuable. It breaks down accountability. It breaks down everything we were just talking about, right? Because if you, not to go much further on this, but it's easier to keep your relationship with the market mysterious. Because if your relationship with the market is mysterious, that means it's still okay to lose. You know what I mean? You're still giving the market power over the outcome. In reality, you have full power over the outcome as long as you control your behaviors. So, yeah, just, yeah, journal. But
if you're in HPT, you're in the right place.
Yes.
You can ask us to see our journals or how we journal.
Yes.
You can actually find the journal that I use. It's in resources. It's literally PDF. You can print it out,
Yep.
and you can grade your performance. I'll post it again or tag it so you guys can see that and download it. But
Yeah.
use that. That's what I use. It's helping me every single day.
Yeah.
But that's all I got for this one.
Yeah. Listen, guys.
I sent Josh a picture of my journal and he laughed.
Yo, but you're still putting in the extensive work, bro. And like, even though,
Yeah.
I mean, Todd will literally print out the chart, put it in a binder, and draw on it. Genius. Todd, that might be an amazing, that might be even more effective, because you're literally taking the time, printing it out, looking at it, putting it in a binder, drawing on it, scribbling on it. Like, you're getting everything out of that. And not only that, you're programming your mind to do the hard work. And you know, yeah, that's literally it. But all right, guys, listen, everyone have a really good weekend. Message me, contact me, anything you need. You know, let's crush it. And once again, it doesn't matter what's gonna happen. What matters is what's currently happening. So that's kind of my slogan right now, right? So okay, guys, I'm out. Have a very good weekend.
All right, thank you guys.
Yeah, thank you guys. Have a good weekend. I'll catch you guys on Monday.